Morning, everybody. Good evening, good afternoon, wherever in the world you are. Unlike every day where we discuss charts on our channel, today we are going to do something very, very different, right? Today we have a guest with us who has really molded my trading career and is helping the traders around the world to trade better. Whenever you speak the word RSI or whenever you think about the word RSI, only one name will strike you, and that is Andrew Cardwell. Yes, you guessed it right. We have Andrew with us today, and we are very thankful that he gave his very valuable time to us, and we will be welcoming him right now. Welcome, Andrew. How are you doing today?
All right. It's a little cool here. I'm sure it's much warmer over there.
So in India we don't have winters so hard, and it's just like a humid conditions, especially
Uh,
in Kolkata. We are full of humidity, nothing else.
yeah. Well, you and I have been together now, what, 10 years?
Yes, sir. I met you in 2012, and since then, my trading has really changed, and you have really molded my trading 360-degree. What I
Well,
would say.
like I say all the time, I appreciate the respect and appreciation you shown me, and in a sense, watching my back. Making sure that other people aren't stealing my work the way they have been. But you've always been there for me, and I've tried to always be there for you.
Yes, sir. Thank you very much, and I've been very lucky to be connected with you, and I've been very happy that you have helped me through my trading journey, and you're still helping me and still helping many traders across the globe. And that's a very good gesture that senior traders like you do, right?
Well, it's like the game of golf. It's 80% mental, 20% mechanical. And
Right, right,
it's the responsibility of those that play the game to teach others.
right.
It's an unwritten rule,
Mhm.
but even when I was coaching my son's little league team, I said the better you learn how to play a game and know the game, the more fun you're going to get out of it, and the more it seems like you just get in a zone, and everything happens a little slowly at
Okay.
first, but the more you can get into that zone, the deeper you can get in. And that's what I did with the RSI.
Okay.
Even Wells Wilder, when I met him, he said, "I'm amazed at what you did with it." And I didn't meet him until 1990, and I was about 10 or 12 years on my own
Mhm.
with no computer,
Right.
calculator, and graph paper.
Mhm.
It was much easier then. Now we have computer issues, connection issues, internet issues.
You
We
still
got
have hard time.
algo.
You still have hard time with your computer.
Well, it's not so much the computer. I think there's people trying to get into my world and steal my work that they're hacking it sometimes. And these people that are selling my courses, and offer them on the internet, they'll never have me.
Yes, sir.
I had one fella called me and he said, "I just have a couple questions. I'm a student of yours." I said, "Well, what's your name?" And he wouldn't give it to me.
Right.
And I said, "Oh, evidently you got a pirated copy and you split it with three other people.
Mhm.
Don't call me to ask the questions. Call that call the guy that sold you the pirated copies or gave it to you."
Mhm. Okay, so
Just
today, sir, we will look at the non-technical part of Andrew Cardwell. We have been seeing Andrew Cardwell working technically, but we'll see the non-technical aspect of Andrew as well. And at the last, we'll ask Andrew to share his thoughts about the Indian markets, gold, crude, of course. So, Andrew, tell us, when you were young, did you have any idea what you wanted to do with your life?
uh, well, I was kind of drawn to economics. I wanted to understand why. I started off as a political science major, actually.
Okay.
And I said, "So you want to be a lawyer?" I said, "Well, I would not make a good lawyer because I don't lie, steal, or cheat. So I better find another occupation. I don't want to be a lawyer."
Uh-huh.
But I was always fascinated. My dad did few stocks and things, and I was always fascinated at how prices moved and wanted to know why.
Okay.
Can you read the underpinnings? Can you read the perspective of what people have as far as a stock? And
Mhm.
what makes others go up and others go nowhere, just go
Right.
sideways?
So, sir, you were an economics major in your college, and
Right.
so how did you go from economics to RSI? How was this transition?
Well, it was the trying to figure out, like I said, what made the markets move. You know, I'd learned about inflation and supply and demand, economic structures and everything. And it was boring, you know, and I wanted to find out why. I was very fortunate that I did have a great professor at the junior county level right after I got out of high school. I went there for 2 years to see what it would be like and find what I wanted to do. Well, Dr. Ryder was my professor for Management 101, Economics 101, and 201. And he went to a university here in the States, Lafayette. Then he graduated from there and he went to the University of Pennsylvania Wharton School, which is one of the top colleges in the country.
Yep.
He graduated number 3 in his class.
Okay.
So I stayed in touch with him after 2 years and went to the state college in New Jersey. And I would go by his office about once a week for about a half-hour conversation. And he asked me where I was going to go to school. And I said, I can't afford to go to the University of Penn. So I'm going to just go to the state college. He said, well, why don't you just come by here once a week? We can talk about things and I'll assign you some papers. Mm-hmm. And he said, I graduated from Penn. I know the head of the economics department. He got me the title. He got me the books. He got me the syllabus. Mm-hmm. And basically I was going to college through him in economics. And even after I graduated, I thought I would graduate from the state college, but I got bored and dropped out. And after a year, they said, you know, going into my senior year, I said, no, I've had enough of school. I want to go find my own.
Okay.
So I got back in touch with him and I told him, I said, I'm not going to graduate. I'm going to drop out and I want to see where it goes. And I came to Atlanta and I found a couple guys that were in the brokerage business. And I got with the brokerage firm. And I was basically a salesman for the fund that they offered to the public. Okay. But I got to sit in on some weekly updates where the senior analyst in Chicago would go through the market. And it wasn't stocks, it was futures, it was commodities. It made sense. Mm-hmm. But I stayed in touch with Dr. Ryder. And when there were some economics reports coming out, I would always give him a call, go by the college and see him and say, well, here, that's what the government's saying the estimate is on the GDP. Here's my numbers. Here's my outlook for inflation. He said, oh, you had a good professor. I said, no, I found the RSI and it tells me where markets are going. And I just reverse engineer it to figure out, well, if that's going to happen, we need good technical charts.
So do you remember your first trades?
Pork bellies.
Okay. So you still trade them?
I'm still in commodities. Pork bellies are a thin market. Right now, the S&P acts more like pork bellies. I call them pork bellies and pinstripes. Mm-hmm. Very volatile. Mm-hmm. Back then, well, I got into the business in 78. Okay. And as I was fortunate because a client of my boss had the article from Stocks and Commodities magazine back then called Futures. And he shared it with me. So I started calculating RSI values even without a computer, first 10 years. So I'd plot the charts and figure out what they were doing, the things I'm known for, my range rules, my positives, negatives. And was sitting in a weekly session, the weekly conference call. And afterwards, my boss come up and he said, he looked at my legal pad and I did not have anything written on there pertaining to anything the home office said. And I was opposite. I said, they want to buy, I want to sell here. They want to sell, I want to start buying here. Mm-hmm. He said, you're not even paying attention. I said, well, I'm going to make sales calls today. I'll do what is necessary. I said, but this has really caught my attention.
Okay. So you make how do you make your trading decisions? Basically, you use RSI extensively, or do you use any other indicators along with RSI?
Well, I would say the first 2 or 3 years, you know, that I was with the firm, I went with them in May of 78 and I left them in about October of 80. So I was only there a couple of years. And I talked to the fund manager who we were selling his product, and he was averaging about 30% a year, no losing years, didn't have 2 losing quarters in a row. And I asked him, I said, well, what's the base of your decision? He said, pretty much, I said, moving averages, I would say. And he said, well, moving averages are a big part of it. And I said, I noticed sometimes, we would see a printout of the holdings, and some of his losers, he would just wipe them clean. He'd take it off and take the loss, take a couple profits off. But he said, you can't be distracted. A lot of it's got to be mindset. A lot of it has to be discipline. It has to be patience. So I started working on RSI charts and put moving averages on them, established what I saw, range rules, patterns, support levels. But when it comes down to it, I mean, it's methodology, patience, and discipline are what the most successful traders have. You have to follow your own system, whatever works for you, risk tolerance, probability, and establish your rules.
You call your RSI works as RSI edge. So how did the edge thing came about around? You're calling RSI as RSI edge. So what is this RSI edge, and how did it come along?
Well, every trader has what he needs most is an edge in trading. Do something different, okay?
Mm-hmm. Mm-hmm.
And actually, when I was teaching my lectures, because I started giving lectures in 1988, 10 years after I started, I got invited to speak at conferences. And then people asked for more than just a 1-hour presentation. So I put my course together, the basic. And one of the guys that took the basic, I said, there's so much more that you can do with RSI.
Right.
So he said, well, you ought to call it the RSI edge, because the way you teach it and what you know, it gives traders an edge. Right. He said, it's not just following the crowd. Mm-hmm. So we called it the second level. We called the advanced level the RSI edge. And somebody said you should have called it the Cardwell RSI edge. It's a little different than everybody else.
Right.
And I even had one session I taught, and this was basic level. Bharat, I only had 15 people. I kept the classes at 14 to 15, so I could really hands-on teach.
Right.
And there were a few guys from Europe, brokers, senior analysts, junior analysts, major brokerage firms all over Europe. Mm-hmm. One from Hong Kong. Mm-hmm. The only American there was a lady who was a U.S. citizen living in Hawaii. There was not another person in that room from the U.S.
Okay.
And I found out Sunday morning or Saturday morning when I met everybody for the first session that these guys, for the most part, were not leaving till Monday, right. Monday morning or Monday afternoon to fly back to Europe. So I said, well, let's have breakfast. We'll all meet for breakfast, just the Europeans. So I got to the table, and as they come in, they were all sitting there. I said, well, good morning, fellas. I said, hope you enjoyed the weekend. And they started laughing. They said, enjoyed it. We learned more about RSI in 2 days with you than we have in our own in the last 10 years. Absolutely. They said, you're like a surgeon. Right. And then I guess John Bollinger gave me that name, Dr. RSI.
Absolutely, like absolutely.
And
so, sir, tell me one thing that you're trading from last 40 years, right? And has your methods changed when you started as a trader and now? Is there any change in your methods, or do you see the patterns on the RSI? Are they different from what they were 40 years ago? Now, have they changed?
The major difference, I don't have to plot it on graph paper anymore. I have computers. And when I got my first computer and my first software, and I could see a bar chart and put moving averages on it, and an RSI chart that I didn't have to calculate every afternoon. It was like Christmas, my birthday, New Year's Day, big celebration for everything. Mm-hmm. Even now, which is now over 40 years since I started plotting these things, mm-hmm. my rules haven't changed. My patterns, still telling people bearish divergence is not a reversal pattern.
Right.
Identify the trend. You want probability. Identify what your risk reward are. Right. Now, my CFG, which is my own personal RSI.
Right.
And that's a little bit different. It looks a little different. It's more sensitive.
Mhm.
Sometimes that will show a bottom or a top
Mhm.
before the RSI does.
Right.
But the RSI range rules and moving averages and patterns, positives, negatives, bull and bear divergences, it stood the test of time.
Right.
And when they say, if it's not broke, don't fix it. All I tried to do was get even deeper to it. Like Wells Wilder said, you took it a lot further than I ever thought I would.
So let's say these days we have this high frequency trading, these algorithms, punching trades, the robots are trading. So
Right.
has this, really messed out with the indicator, or has these things changed the RSI patterns that were being plotted when we didn't have this HFT and algos?
No, I can show you. I was giving a presentation at like a Traders Expo or a money show.
Uh-huh.
And this guy come up afterwards and he had a few charts, a bunch of papers there. He said, "Sir, can you look at these?" So I sat down on the table and I looked at the first one and I said, "Oh, look at this, and this." I said, "Damn, this chart is very busy." He said, "Well, it's a 5-minute chart."
Right.
I'm a day trader. Do you day trade? With everything you know, you should just sit at your computer between 8 and 10 or between 8 in the morning and 12, make a few trades on the short term. I said, I have a life.
Yeah.
I said, I have a life. I have a wife,
Uh-huh.
And a happy wife is happy life. So
Right.
as long as you're making money that she can spend, that's good.
Yeah.
But I said, the shorter term time frame is noise. Even high frequency trading is noise.
Mhm.
Something crashes and they call it a fat finger that somebody placed an order or something.
Right.
I said, but the end of the day close. Think about it.
Mhm.
Where is your account statement balanced?
Right.
It's not balanced on the open, the high of the day, the low of the day. I said, you can see where you are in a trend based on, did it close in profit?
Absolutely.
Okay.
Mhm.
And patterns are still the same. The signal counts are still the same. The target setting, people say to me, how can you set 5 targets off of one positive reversal? I said, how long have you been using the RSI? He said, 6 months. I thought I knew it.
Mhm.
And somebody else might be sitting on this call who starts laughing. And I say, what are you laughing about? He said, well, I've been with you 10 years and I'm still learning part of your brain.
Right.
I said, you have to allow the market to show you what it wants to do.
Right.
Okay.
So do you trade intraday at all?
Pardon me?
Do you trade intraday?
Do I trade intraday?
Yeah.
No, I mean, I can sit here if I think I see a buy signal off my dailies, and I'm looking at dailies, weeklies, monthlies.
Okay.
In fact, next week we got a great close next Friday.
Yes.
Daily close, weekly close, monthly close,
Right.
not a quarterly close,
Mhm.
but we had December 31st as our quarterly close.
Okay.
And I do pivot points. Some people call them swing points.
Mhm.
But I look at the charts to see what they're telling me. Is this trend still up? Did it just pull back into a support level?
Mhm.
These swing points or pivot points, is it near a daily swing price, a weekly swing low price?
Mhm.
So I'm looking at the probabilities.
Okay. So, sir, you always, keep telling, and I have also read many of your articles where you say that there is a big difference between trading and making money. Right? You
Oh,
always keep
yes.
saying that. Yeah. So, can you throw
Yeah.
some light on it? What is the difference between trading and making money?
Patience, discipline, knowing your probabilities, knowing your risk tolerance, knowing yourself. You're familiar with Mark Douglas's work.
Right.
Okay, his first book, he flew from Chicago. He and Paula flew from Chicago to Frisco. I flew from Atlanta to San Francisco.
Mhm.
Then we met up out there. We flew to Vancouver, Canada.
Okay.
And then from there, a 14-hour flight to Hong Kong. And we were speaking in Hong Kong.
Mhm.
And he kept, we were sitting together. He kept asking me questions. How do you feel with this? How do you deal with this? When do you know you're right? When do you know you're wrong? What's your risk? I said, what are you doing? He said, well, I'm giving you an interview and See, talking to a trader, I want to know what you're thinking, why you think it, how you handle this, how you handle that. That is one of the best books ever written.
Right.
I wrote something that was going to be, I was asked to write a book, but I turned it down.
Yeah.
And I said, I'd put more in my courses than I would ever put in a book.
Yes.
But I said, the one thing about trading, you have to realize, why are you trading? You have to determine, it's not just money. Are you trading because the guys you play cricket or golf with are playing or trading? And most of them are just listening to their broker. I said, it's your money.
Yeah.
Learn how to read it for yourself. So when your broker calls and says, oh, we got this great hot stock, and you pull it up and you see it's in 60-20 and the trend is down, the range rules are down.
Right.
I actually have, Bharat, I've had my son tell me, people call him and say, you know, we got this great stock we want to talk to you about. And he said, no, I'm not interested. And they say, wait a minute, Cardwell, are you in? And before they can say, are you any relation? He says, yeah, that's my dad. Well, can you call your dad and tell him to call me? Or can I call your dad? He says, write him an email. Here's his email address. If you're lucky, he'll write you back.
So, just like a question to lighten up the mood, have you blown up your account or have you blown up your client's accounts somewhere during your journey as a trader?
No, never.
Okay,
I
that's a
did
unique
try
thing.
and talk. I did try and talk out a couple clients from putting a position on. And I told him, I said, you don't want to do this. He said, why not? I said, well, you haven't taken my coursework, but you know, you've heard me speak and you wanted to be a client of our firm and get in on the fund that we had, and you're trading your own private account. I said, I don't think you should do this. And he said, why not? I said, because I don't see it that way. And I've got a little more experience than you do on the technical side. Well, when it started going south and he didn't have that trade on, I said, well, what would you do here now that it's down to this point? He said, I'd probably buy more. I said, wrong. You don't enter, you don't add to losing positions.
Right.
I said, think of it this.
Okay. So what you will be doing when you are not trading, like when you are not trading during the day, right? What is Andrew doing when he is not trading? What are your other hobbies?
Yeah, I'm still a baseball, as we say, a baseball junkie. I played from the time I was 6 until I was 32.
Right.
Playing golf. When I got too old to run the bases, you know, I thought about getting a little scooter to run around the bases for me. So whenever I got up to bat, I make sure I hit it out of the park so I didn't have to run fast. But I play golf. I enjoy people. I enjoy interaction. Just sitting and talking to somebody, finding out who they are, getting to know them.
So what are the best lessons you have learned as traders? As a trader, what are the best lessons that you have learned as a trader?
That you don't know what you don't know until you need to know it.
Oh, that's great. Wow. Please repeat it, sir. Please repeat it.
I have a friend who's with stockcharts.com.
Yeah.
And he does Wyckoff. And I've known Bruce for years.
Right.
And he says, you will say something that does not make sense. And he calls the Drewisms. Okay. Like Yogi Berra, the famous baseball player. He said, you know, baseball is 90% physical and 50% psychology.
Right.
It doesn't even add up to 100. It goes past 100%. But when I say something like that, you know, you don't know what you don't know. Look at people that look at RSI. They see a bearish divergence. They say, oh, the market's reversing. The market's just overextended. I don't even use the words overbought or oversold.
Right.
They overextended. You know that. You've heard me say that many times. The market's overextended. It needs to correct into a positive.
Right. So the RSI is the most misused indicator. Rather, I will say it's not the most used indicator. Rather, it is the most misused indicator. People don't know to use RSI in the proper way. Right? They still use divergence and they still come up with the words like overbought, oversold. The markets are gonna correct. Right? It's getting overbought. We have
not even just, they don't even say correct. The market's, it's topped out. It's going down with a bearish divergence. It's reversed now.
So, sir,
But I use,
do you have any words for our new traders who are just trying to join the markets and the people who are just trying to get into the markets? Do you have some words with them for them?
be patient, study, respect the markets.
Mm-hmm.
Don't go crazy just because somebody tells you, oh, it's time, you know, this looks great. And maybe he's only traded for 2 years and you're a brand new trader. He said, no, buy more than one. You know, it looks good. You know, buy. No, be patient, understand your risk, understand your risk tolerance, how much you're willing to risk on a trade. Keep records, keep a journal. Why did you make that trade? Are you listening to somebody else? How much have you studied? You know, everybody can look at a bar chart and see the bar chart going from lower left to upper right and say that's an uptrend.
Right.
Or upper left to lower right, that's a downtrend.
Right.
But there's a lot happening in there.
Mm-hmm.
Understand what you want to get out of trading.
Right.
Some people just trade for excitement. Some people trade because their friends do.
Right.
Understand what you want to get out of it, because that's going to determine how much you're going to put into it.
Mm-hmm.
And also spend more time
Right.
on the psychology of trading. And Mark Douglas and I, we met in 1989.
Right.
He passed away in December of 15.
Mm-hmm.
I still work with Paula, and we put that little book together that's on Amazon.
Right.
And I was going to write a book, but I decided not to, because the publisher, you know, that I was talking to, I said, I only ask that you do not market, advertise, or tell anybody,
Mm-hmm.
because I don't know if it's going to take me 3 months. I don't know if it's going to take me 6, 9, a year. 2 weeks later, they were advertising a book.
Yes.
And I called them right up. I said, I'm sending back my advance. You avoided the contract.
Mm-hmm.
I said,
So,
I had people
yeah.
calling me asking for a signed advance copy.
Right.
And I said,
So, Andrew, I would like you to, share some thoughts on the charts. No, we would like to see what are your thoughts on Nifty, what are your thoughts on gold, what are your thoughts on crude. So I'll just be making you the presenter of this thing, and I'll just it will be very great for our viewers if you can just share your thoughts on Nifty in the coming days, and some stocks like some commodities like gold and the US dollar, things like that. So I'm just making you.
I've been bullish on gold since June of 1978, and I
Yes, sir.
remember when it first got above 300,
Uh-huh.
people were saying to me, "Oh, it's topped out." I said,
Right.
"I've got targets at 400, 500, 700," and when it got to 875,
Uh-huh.
that was January of 1980.
First, let's look at Nifty.
Okay, I may have the one out of Singapore.
Yeah, it's okay.
I mean, that's the one I followed for the longest time. Okay, we're going to slide this over here. What's that? What direction is that chart? Up.
Uptrend. Yeah.
Okay, how did you know? Because this is lower left, this
Mm-hmm.
is upper right.
Right.
We'll zoom out. That's a daily chart. There's more. I'm going to slide us down here out of the way for now, if I can. Okay. All right, there's daily.
Mm-hmm.
It's been up since what? March? Here's February, January and February when it sold off hard.
Yeah.
It's been up since. Here's my range rules, getting up near 60, back down near 40, back up again above 60. Now the range has shifted.
Mm-hmm.
Comes back down again, and this low is higher than these lows. It's definitely higher than these lows. It's around, the RSI actually got down to about 32, but then it came up through 60, came back down, made a higher bottom, higher
Yes, sir.
lows
Yes,
and
sir. Mm-hmm.
higher lows and higher highs.
Mm-hmm.
We've recently had positive reversals. You don't want to be buying when you see, well, that's the beauty of moving averages. It smooths out the volatility. And as far as my work compared to Wells's, I didn't change the formula. I put the moving averages on, decided on ranges because people are extremely bullish at tops.
Right.
So sometimes it'll get all the way up. Here it got up to 73. When you look at weekly charts to see where we've been, I mean, back in 16, and then we got to lows. The RSI got down to 30 level, came back up, and then it made a higher bottom in price. You draw a trend line. Here's a low, then it goes up, and then it comes down, makes a higher low, and starts again. Well, the moving averages are telling you that it's starting to go. We get an arrow. This 9 went above the 45 on close. Simple moving averages. Now this is all positive. So was the RSI. Now when we pulled back in these lows, look, we went back and tested the lows from 2016 or March of 16.
Right.
And look how low the RSI was. The RSI got all the way down to 30 again, just below 30. Let me get my cursor back up. And the RSI got to 14. It went below 30. If it goes below 30, then you're in some serious debt. That was a hard sell, and a lot of people lost a lot of money.
Right.
But when it started up, we got up through the 60 level with my range rules, and then recently, it was last year in November, I had the same rules for moving my 9-period moving average on RSI. It broke through above 60. You get I got these other ones on from daily charts, but that 9-period on a weekly went above 60 back in November. I said, we're going to new highs. And people said, no, it's overbought. It's above 7, it's above 60. And I said, well, the RSI got up to over 70. And then the moving average got up, and the longer term moving average was turning up. All the simple moving averages on close were turning up. So back last year with that pullback in September, come back to about 11,000, 10,500. I said, we got another leg up. Once we took out the previous highs, it really started to accelerate. So it's still up technically. It hasn't changed.
So, but the RSI is close to 80. Do you recommend taking off some positions?
That's the other thing. When people say they want to learn how to trade, I said you need patience and discipline, but you also need to have risk management.
Right.
And what are you willing to risk? You buy it now. Some people will risk $1 to make $1. I've asked that in sessions of lectures I've done, public ones, where I said, how many would risk $1 to make $1? There's a lot of hands that go up.
Right.
I said, you're not a trader. One guy he stood up in his seat and he said, what do you mean? I said, you're a gambler. How many people would rather risk $1 to make $2 or $3? How about the probability of being over 50%? You're going to make a trade that's 50%? I said, when I look at a trade, it's usually minimum 3 to 1 and at least a 65 to 70% chance. But most of my trades, the 3 to 1 is just the start.
Yes, sir.
To me, if I made $1,000 in a trade in 2 to 3 days, that would be like a day trade to me. Okay.
Right.
When I put a position on, I want the other people buying to push my price and my position higher.
Yes.
Because more and more people don't realize that this is a low down in here. When they realize the low is in place is normally when it gets a little higher.
Right.
You start getting more active, more volume. Pullbacks here should be low volume pullbacks. It's not heavy selling. And when it starts up, everybody's jumping in here. And they stay with it, maybe even add a position. Now they're up here. And I've taught people, that's when you're getting that high, and you're looking at other indicators too in terms of price.
Right.
But when you get up into that range, it's getting so overextended that you should take some of your profits off the table.
Right.
Okay. Protect your position. The trend is now up, but it needs to correct. So
Right. Right.
it's not overbought, it's overextended.
Yes.
Same thing here. This little divergence here was less than 5 periods apart.
Right.
This was less than 5 periods apart. This was just a momentum high with this price.
Mm.
And look at that previous top.
Right.
Previous top over here, it broke through it. We sold off, we've come back above it, and then we broke above that line again.
Right.
That's weekly. This would be daily. There's that line again, still above there. Here's one of those positive reversal patterns. It says it's going higher. So you identify trend first. I think the trend is turning higher. I think it's turning up. What's my risk? What's my target? Is it 3 to 1? Is it 4 to 1? Is it now just a 50% chance, or other technical tools based on price are turning positive?
Right.
Now you're increasing your probability of success. You start watching price action. You say, yeah, this is still going. And once you identify that initial risk, you lock in profits by bringing up trailing stops to protect your profits.
Yes.
But when you get as high as that was on the weekly chart, I see it up in here on a weekly, and I said, well, this could have a serious pullback because you had momentum high, short-term bearish divergence, another bearish divergence. You see how the moving average didn't really accelerate up through the 60 level. It's telling me it's going to sell off again and come down into the 40s.
Right.
It kept going. But here is when you can take half your position off, maybe more, depending your tolerance, how much you want to risk. Tighten that stop up to at least the previous bottoms.
Right.
So that you don't get caught in this sell-off.
Yes.
I tightened it up to what was last week's low.
Yep.
And maybe take half off and take another half of that off, and I'll start seeing something on the short term, the daily charts or the out of 240s, and say this could be a decent pullback, a big correction.
Yep. RSI gave us the warning that something rough is coming, right? Before this sharp fell off, right? So RSI gives shows the way. And so, sir, it's always that I always keep telling people that some people trade for 1%, 2%, 3% gain. And when I tell them that we haven't been taught by our coach, we haven't been taught at Cardwell Finance to trade for peanuts. Whenever we are trading, we always think in double-digit profits, right? So 1%, 2%, 3% is just like peanuts, right? When you want to go big, either go big or go home. That is what I just say, and that is what I have learned. Yeah.
Yeah, if you go big, you're going to, sometimes people think just because they go big, they're going to be right. What if they're wrong and you go big? Understand how much you have at risk. That's how people get blown up and why a lot of traders lose money. They get overconfident.
Yes.
But the other, we were talking about the Druisms that people say I use, like you don't know what you don't know till you need to know it. Well, at this point, you need to know that this is very overextended. That's a weekly chart. And you look at the daily, is that overextended? If that is, what are your price support levels? What do you not want to see it do? Because I wrote an article, I think it's on the website. Today's technicals write tomorrow's headlines.
Yes, sir.
Well, with this moving up, even on a weekly, people were getting so excited, but it wasn't confirming. It had a bearish divergence in it, which meant it was not overbought, but it was definitely overextended.
Yeah.
That today's technicals will show you basically two things. That there's something that's probably coming in the future that's going to be influenced or coming out shortly, which could influence the direction of markets. Yeah, that's one of those what I call fundamentals, not funda with a D, just FUNNY, fundamentals.
Yeah.
But today's technicals give you a perspective. One side note, the RSI markets and trading are basically there's four key components: price, momentum, time, and sentiment.
Right.
The RSI, and I looked at other indicators. I went through Elliott Wave and said, that's way too complicated. I looked at stochastics. I looked at this one, at that one. And the RSI is the only one that shows price, momentum, time cycles, and I teach the time cycles I've seen, and sentiment. It's showing you the perspective that most traders have.
Yep.
I mean, it's got to be equal buyers and sellers, but there may be 5 buyers and 1 seller who's selling 5 short. There's got to be that balance. But when most people say, oh, it's you know, it's overdone. It's no, it's not. It's still rising. It's still rising. Look at what you're trading. Look at what the technicals are telling you. The technicals will tell you more about the future direction of a chart. And sometimes I was saying it last December, that I thought it was going to get very interesting last year going into this break. Well, this thing's very overextended, daily, weekly, monthly, hourly. It's not hitting the positive reversal targets it should be. It's starting to fail. There's something out there. We don't know what it is yet.
Yes.
But there's a black swan or something out there. And then all of a sudden, coronavirus.
Right. So can we look at the gold chart? How the gold is shaping up?
Gold's still going to, I think, go over 2,000 again. We're probably going to see 2,200, 2,400, maybe 25 or higher.
Oh,
nothing. Oh, with the amount of money that's being printed here in the States, and central banks are.
The best thing is this: when you come up with this type of targets, right? Yeah, but it is really nobody is talking about 2,400, 2,500, and
no. Well, if they want to talk about that, they can call me because that's where I'm looking for. I'm looking for silver to go to 35, maybe 40.
Yeah, if we come up with this type of targets, and if we talk about this type of targets, right, people will call us these people have gone crazy, right? They will call us mad.
Yeah, look at all the lines. This is from a daily chart on gold.
Yeah.
Let's look at monthly. And we'll zoom out. You see this back here? This was all the way back in 1980. This came down. You were way up. RSI had gotten up to 78.
Yep.
Then here, it got up to 55. And the price here, 1250. This peak, the price was 1091, so it was lower. That's a negative pattern.
Yeah, a negative on monthly.
On a monthly.
Yeah.
Okay, then we come down, we made that low in 98. We had a range rule shift, we went below 40, and we come up, and since 2001, basically went back above 60, pretty much stayed above 60. The moving averages that I talked about before, they start to accelerate when you get a moving average above 60. And it stayed above 60. Look at the price action.
Yeah.
Look at the difference between 738 and 757. This is higher than this. That's basically the positives.
Yeah.
We had a little bearish divergence, which comes in downtrends, but it's not a reversal. Look at your moving averages on close. Just the moving average on close on a monthly chart would have kept you in this trade. I was bullish, like I said to you before off this call. I've been bullish on gold and silver since 78.
Yep.
And when we went up and we made the highs in 2011, then we sold off again. We're still pretty much staying above the highs that were made in 2008. Right here. What were highs before become bottoms in here. We're not really breaking down as far.
Right.
We went below 40, but look, the moving averages, moving average 9 on a monthly never went below 40. The weekly, same thing. It's staying in the upper half of the chart. The 9 staying above the 45. That's just one of the rules. And when I was telling Wells about the 9 and 45 and the range rules, he said, wow, I wish I had found that myself in 73 when I wrote the book. But we learn, we experience. And, you know, I had somebody tell me that something I was looking at was totally off base. I was wrong. He was buying. And I said, how long have you been using RSI? He said, oh, 3 or 4 months. You know, you sell 70 and you buy 30.
Uh-huh.
And I had one of my students standing there. It was at a conference, and he started laughing. The guy looked at me and said, what are you laughing about? He said, you think you know RSI after 3 months?
Right.
I've known him for 7 years, and I'm still learning every day.
Mm-hmm.
But that moving averages on close are very helpful because it smooths out the volatility. I like a lot to look at not a bar chart. I like to look at a line chart, just a line on close.
Yes.
Same thing, lower left to upper right, you're in an uptrend. So keeping it simple, you can see things that you wouldn't normally see. Talking to too many people, you know, start studying and learn what to look for,
Right.
because the market will tell you what to look for.
Mm.
I remember Bitcoin was the same way. November of 17.
Yes,
We
sir.
got above 15, 18,000. I had a Skype session with about 5 or 6 of my best students.
Mm-hmm.
And I said, okay, I don't talk about this often, but I want to pull up Bitcoin. And I said, I'm going to give you guys a minute, but you tell me what you see.
Mm-hmm.
They said, it is severely overextended.
So where you feel it is heading right now?
I think it's, again, a little ahead of itself. I think the high, we can pull that chart up in a minute.
Uh-huh.
But the gold and the silver, I still see going to higher levels.
Mm-hmm.
Longer term, because the types of moves, more and more people are starting to talk about inflation, commodity inflation, food inflation, services. You can ask any of my students. I've been talking about inflation coming back since March or April of last year.
Mm-hmm.
And now everybody's talking about it. So we're having a shakeout. It's one of these shakeouts that scare people. You know, they see gold pull back. But I think you will see gold go to new highs. I remember when I was talking about it last year, or even back here in March of last year.
Yeah.
I said, this is on its way to at least 1750, 1850, 1950, 2000. And they said, what are you seeing? I said, well, I'm seeing positive, wrong way. I'm seeing positive reversals. I'm seeing targets that are above previous targets. And I said, I keep adjusting. These are a bunch on here from the dailies.
Mm-hmm.
But same thing in silver. Now it has not gotten back above 60.
Yeah.
Back in November, and then it got higher,
Mm-hmm.
but it didn't take out the price. So that was 1954 versus 1958.
Yeah.
So it went higher in price, got more overextended, but the price wasn't confirming.
Uh-huh.
Now let's pull back and you see where it is now, finding support around the 40.
Right.
And we're doing what? With a higher bottom. Some people use, they do pitchforks on here, Andrew's pitchforks, and it's not Andrew Cardwell. Look how this started down,
Okay.
rallied up, turned down, went below it, broke out of that side,
Mm-hmm.
up to here, now back down, but it's still outside that
Yes.
pitchfork line. Pitchforks are very helpful.
Oh.
Good technical tools usually will line up at the same time.
Yes.
Okay. And the same goes for time frames. I'm not afraid to look at an hourly chart. I'm not afraid to look at a 15 or a 5-minute chart.
Mm-hmm.
But I'm looking at those on specific entry points based on what I've seen in my daily work and my weekly work. And the weekly, they call them swing points or pivot points.
Mm-hmm.
Where does that show support? This low was about 1780. How come this low was 1800?
Right.
So this daily chart, if you look at a 240, now the short terms are starting to base. Somebody's going to come out soon, probably this week. If this market turns up, if gold turns up, they're going to say it's an inverted head and shoulders.
Mm-hmm.
This is the left shoulder over here. Here's the head. Here's the right shoulder.
Right.
You think I'm going to jump all over a 4-hour chart in head and shoulders? I don't think so.
Mm-hmm.
I may look at this and say, well, the 9 of RSI went below 40. Now it's come back above 40. Now the 9 is crossed, which
Mm-hmm.
means this price level back here, these closes are important. That's 1827. You can take it all the way down. You know, you asked about things different than they were years ago.
Yeah.
No, the same thing is true with short-term charts. Here's a 15-minute chart.
Right.
This was oversold back on the 20th.
Mm-hmm.
All the way down. The RSI got all the way down to a 20. Then it had trouble getting above 60, but it did. Then it went higher. Now it's made a bottom over here, which is still well above this bottom, 1834, 1840, 1835. You're going to see the same rules. And somebody asked me one time, what's the difference between a 5-minute chart and a daily chart to you?
Mm-hmm.
I said, well, the 5-minute chart is going to show all kinds of activity,
Right.
all kinds of patterns.
Mm-hmm.
But you're always going to be influenced by 1 degree longer.
Mm-hmm.
A daily chart, an hourly chart is influenced by the next longer term, say daily chart. If the daily's in an uptrend and the hourly sells off into support or only comes back to 40 and then turns higher, then the trend is still up.
Yeah.
But I look at all time frames, and anything that's more intermediate to major will show up in the weekly, the daily, the 240. They should all be telling you the same thing.
Okay.
And since we said Bitcoin, or you want to see silver?
Mm-hmm. Let's see Bitcoin, sir, if you have the Bitcoin chart, because
yeah. Okay, let me see. Where's crypto? Look how that took off from 10,000. All right. This looks corrective so far. It's broken down, but the RSI's only come down to a 45.
We have a big positive reversal.
Yeah. So you're one of my good students. I had about one of my best students. You see it quick. It's like I'll do a call sometimes and I'll have a new student on there who's a little gun shy and afraid to say anything. They said, I just want to sit in on. I said, that's what I want you to do. You only have enough knowledge to hurt yourself right now. As you learn more, you'll say more in a session.
Yeah, still learning, sir. I'm still learning from you.
I had somebody told me, he said, every time I make a phone call to you, whether it's 5 minutes or 30, I have to keep notes and record the calls because you cover so much in a short period.
Yeah.
I said, you've been looking at the RSI for a year, maybe 2 years. I've been looking at it for 40.
Yes.
I said, I've probably forgotten more than you'll ever learn. And I said, I just keep what's important. The range rules, the moving averages, the patterns, the things I teach in there and then in the advanced course. Yeah. Because he said he looked at the, he was considering getting the courses and he looked at the outline. Mm-hmm. He said, I said, between the two, it's about 350 pages and 22 hours of audio.
Yes.
And he said, you're like a surgeon and you're dissecting. I said, there isn't much now that isn't the same thing I saw in soybeans in 1980 or when they topped out, or the grain embargo by the Russians where we boycotted the Olympics. And the next day after Carter announced that, I mean, soybeans, limit down soybeans, cattle, hogs, cotton. Mm-hmm. And I said, but the patterns showed it. They said it was going to turn. I didn't know what it was. We don't know what happened, what the cause is, but we can see when the probabilities are not confirming a certain trend.
Right.
And it's getting tired, it's getting gassed.
Mm-hmm.
Here, the Bitcoin. Yeah, this move was amazing to me, from here through here.
Mm.
I mean, it took it all this time to go, say, from 13,000 up to 19, sideways, breakout, and then go from 20,000 to 40,000. Now that's a little bit of euphoria and irrational exuberance.
Right.
And this is also, when this started up here, Bharat, I had people calling me that trade Bitcoin, and Bitcoin works very well with RSI numbers because it's all just numbers and patterns. But I've heard people talking about 50,000 by June, maybe even by the end of March, and 100,000 by Labor Day, maybe 200,000 within the next year. I've even heard targets of 400,000. If this gets over, just off the record, and for the hell of it, if this gets over 100,000, then the economies of the world are in trouble.
Okay.
This is not just a replacement for paper money. There was a while there they were talking about Bitcoin, and now you're going to see the restrictions and the regulations change. There was a time that they were saying most of the money in Bitcoin was being traded for with illegal activities, criminal activities.
Yes.
And scared people, and that led to big drops, and then it come back up. But if we zoom out or go back, let me put up the weekly. See how this looks like what we just saw? Except all this was above 60. RSI wasn't even dropping below 60. And it was getting stronger. The moving averages, the 9 got up to almost 80. The 9-period simple moving average of RSI was hitting 80. And yet it just sold off, bounced off to 60 and kept going. This to me looks very similar to what we've seen recently.
Right.
In a couple of weeks. But before that, we had it once before in 14, and then it dipped down, and it come down 200, and it started moving up. But when it got up to 17, and you see, here's a momentum high, and you don't always make a bearish divergence high. Sometimes you just make a high and it never goes back there.
Right.
And then the moving averages drop below 60, drop below 50, got down into the 40 range. But this was November, December, and I was sharing it with clients and students. And they were saying the same thing. This party's about over. Back in here in early December. So I had some people that were trading Bitcoin that took every Bitcoin off the table they had, sold it all. And they had been in it from much lower levels, 5,000, 7,000, sold out above 17, 18. Scaled out like you scale into a trade, scaled out of the trade. A little bit here, next big rally, a little bit there. But there's more and more people following it now, and it's also some of the brokerage firms. I've had people call me and say, I want to buy your course. Do you accept Bitcoin? I said, no, I do not do, no. And they said, well, why not? I said, well, my choice.
Right.
But when this sold off from that 20,000, got up to 18, 19, 20, this is a weekly. Got all the way down here. And that was in December and February, January and February got down. Because I had people asking me, what do you think? I said, well, we're probably going to at least 15, 10, 8, 6, 4. maybe under 4, possibly, possibly under 3.
Mhm.
Well, if they were a true diehard Bitcoiner, they said, "Why are you so negative?"
Right.
I said because the trend is down.
Mhm.
It's over for a while. And we went from, this was June of 19. We got to go back to September. Yeah, when you go back in here, you see the way this went down. You see when the RSI went down. November of 18. And then even lower down here. So that was into December of 18 or December of 17. We made that peak. I went too far. Okay, so it was coming off in 18 and 19. And when it got down in here, people were calling me when they told me, it was going to the moon. Was it bottomed? It bottomed? I said, look at your RSI. Got way down. Got under 20. But then you started making rising bottoms in the RSI, but not necessarily in the price action. And from there, we had some negatives forming in the RSI that were giving me targets below here. Said we may go under 3.
Mm-hmm.
We had trouble getting under 3. So there's a sell signal that's not achieving the target. At the same time, the moving average on RSI is rising.
Right.
You got a longer term bullish divergence. Then you get a break of the 50 level, but it didn't get above 60, which meant there was still more downside because look at your moving averages on close.
Yeah.
And then you come over here and you get down to roughly a 40, and my 80, 40, 60, 20 is not chiseled in stone. I mean, it could go to 36, 37 and a half. On the upside, it could go to 62, 63, which are interesting values because they're Fibonacci numbers. 61.8, 37.5.
Right.
So this is why I said when I was doing my work early, RSI was the only thing that gave me all kinds of relationships I could see in other things.
Okay.
And then talking to people who were expert in their fields. That's how I taught myself candlesticks.
Right.
I know Steve Nissen. I've known Steve Nissen 25, 30 years. I know Stephen Bigelow with candles.
Yes.
How I learned them was I look at these candles, but I look at those after I see what I see here. I say, this is starting to fail. This looks like it's worn out. Failing to hit the downside targets. I had targets at 27.50 when it didn't go below that. And I said, well, we probably made a low back in here. Didn't really break the 3,000. Now we're finding support near the 40. We're starting to see the moving out. And I see this big candle. I go to my candle people that know it, and they said, that's a big bullish engulfing pattern. I said, well, I thought it had to be something because you get all these little dojis in here and this thing is trying to go lower, but the market's not letting it.
Yes.
So I taught myself candles basically by watching what the RSI was doing to give me something that said it's trying to turn. This is a turn. This is a doji. This is a bearish engulfing pattern, bullish engulfing pattern. When you have different methodologies or approaches saying the same thing, you're increasing your probabilities of success.
Right.
This is where the patience comes in. The discipline. You can't have one set of rules one day and next week change all your rules because you took a couple losing trades. It was probably what I call pilot error. You didn't follow your own rules. You can't drive 80 miles an hour and then throw the car in reverse. You'll probably leave the transmission about a couple hundred yards behind you when the car finally stops moving forward.
Yes.
And when I explained momentum in my first few lectures in the late 80s in the classes or the presentations, I said, it's like hitting a golf ball or throwing a baseball. The initial surge of power and momentum comes from when the ball's hit or when it's first thrown. And it will get to a point where it's rising with declining upside momentum. And that's what you got to watch for, because it'll hit a peak, roll over. The momentum is still up, but it's slowing down to where it's nowhere near it was when you first hit or threw the ball.
All right.
When it starts down, gravity brings it back down, momentum increases, prices fall, momentum increases more. You're in a serious downtrend. And I think that's what Bitcoin did after it topped out at near 19, 20,000 back in 17. I told people, this is not going to last long.
Okay. So it has been a pleasure to have you, sir, with us, and you have shared a lot of knowledge with us. Any last words before we sign off?
The only thing I want to leave with people is a quote I saw on Twitter too. Where you want to be down the road in your goals is based on who you associate with now, who you can learn from, who you trust and respect. And I've always believed you're in my circle. You know, I have a thousands of people that know who I am. I don't know who half of them are, right? But I know the ones that have shown me the respect and appreciation of my inner core. And it's true of life, our inner circle. As we go through life, the circle of friends that we have usually gets smaller because of the experiences we've built with them and have shared together. You know who you can trust. You know who you never want to speak to again because of the way they treated you. But I feel the same way about, you know, the piracy issues and everything that I've dealt with.
Yeah.
To steal somebody else's work, I always say plagiarism is the highest form of flattery.
Yes.
And it's easier because you don't have to do the work yourself. You just steal somebody else's.
Yeah.
But if you truly want to learn, I'm here to help. I'm not going to be offering the courses much longer. And I ask for everybody else's help to help me find the people that are stealing, number one, who show no respect. But I am always willing to help. You can ask any one of my students. Look, you and I have known each other over 10 years. There's people I still talk to from 20 years ago who are furious at the way, you know, people steal other people's work. You shared with me that that part of the world is like a hotbed of that activity because there's no, you know, they know they can get away with it. But I'm just telling people too that there are people out there who heard me speak at a conference maybe a year ago, 2 years ago, and they put up a YouTube and they're talking about RSI. I had one of my students tell me this one poor guy put up a YouTube and he was so far off the mark. My student sent me an email, Andrew, please call this guy and save him. He's a young guy, he's probably 25 or 30, but he doesn't know what he's talking about. He's going to lose a lot of money. And anybody watching his videos is going to lose a lot of money. You and I experienced the other fella, Vishal, and what he was doing and putting my name on his website. So if people searched me, went to him.
Yes, sir.
And actually lying to people, telling people he had studied with me for years. I can introduce you to somebody from this, like the guy in London that heard me in 1990. You two would have a great conversation, compare notes, compare charts. Okay. But you're in that, what, I have one of my clients, he's a spine and neck surgeon, Steve. And he said, you're like Yoda. I said, no.
Yes, sir.
I said, yeah, but Yoda was three foot tall and I'm 6 foot tall. So he calls me Tall Yoda.
Yeah.
There's another one in London, Chris, we call him Chewy. He was doing charts one weekend. His wife said, are you ever going to shave? He said, I'm working. She said, you're starting to look like Chewbacca from Star Wars. And Steve calls himself Han Solo. So people, you know, you're an analyst and trader.
Yeah.
We're wired differently than other people. Okay, we see things. Vision is what your eyes cannot see, what most people's eyes do not see.
Yes.
And that's why I said most people don't know what they don't know until they need to know it. Take a bearish divergence in Bitcoin when it's at 20,000. Oh, you think it, some people say, oh, it's going to the moon. No, it's going to keep going. No, that was a short-term bear divergence, said there's trouble ahead.
Right.
Markets will show you what they want to do if you are willing to listen to it.
Yes.
You're willing to have rules and patience and discipline and probability, risk management. Trading is not just throw a dart against the board. Now, in the late 70s, we could do that in the futures because inflation was going. Didn't matter what you bought, it went up.
Yes.
I think we're seeing the same thing in stocks.
Mm-hmm.
But there's a big difference between the economy now and the economy in 1980. That's where my economics background does help. But I also believe that what you put into something will help what you get out of it, be able to see things. And it's not a secret society or anything else. It's more knowledge is power.
Yes.
Power and ignorance usually is poverty.
Right.
So what you learn today, you can use tomorrow and learn from your lessons. And I said, keep a journal.
Right.
And I'm willing to help people as much as I can. You've seen what I've done, for you and for others. It's like the kids on the Little League field. Some of them turned out to be great basketball or baseball players and got college scholarships because they studied, they learned, they practiced, they got good coaching, and they had a good base. So we'll get together.
As we say that if you think education is expensive, then try ignorance, right? This is rightly what we all have learned from Andrew. And thank you, sir, for being with us and giving us your time. It was great talking to you and looking charts from your eyes. And I have put up your contact details on the screen. If anybody wants to contact Andrew, he can contact on this email, and he's also on Twitter. You can contact him directly on the Twitter. Again,
what is the Twitter's what? Cardwell RSI.
Yeah, so I put the tag on the screen, and if anybody wants to contact you, you can contact on Twitter and your email address as well. And we have also put your website there on the website. So it was great to have you, Andrew, on the channel today. And
it's first time we've done something like this in 10 years.
Yes, and we're looking forward to do more of these type of things where we can, type of help traders to reach their goals.
Yeah, and just remember what I said, there's usually 10 good trades a year. 3 or 4 are exceptional. I think it could be coffee, sugar, the grains. With the stocks, be careful. The dollar may have more downside. And while you're Nifty and Bank Nifty or whatever, they're still making new highs. But I think they're starting to get a little ahead of themselves and probably due for at least a 20% pullback sometime.
Okay.
I mean, most markets, they don't all turn at the same time. We get the dollar up versus down. That affects markets here and it affects markets over there. But this pandemic was global. And there's a lot of markets around the world that are inflated. I've been long the euro, not the euro so much as the Australian dollar versus US dollar. Since about 60, it's up near 77. There's some markets, the gold, I started really buying the gold and silver when they were down around 1,300 on the gold, 1,400, silver was 1250, 13. And I told people 2,000 on gold and 20 to 25 on silver. And they said, you're crazy. I said, okay, watch. Market's crazy. But you got to know what to look for. The market will tell you what to do. I really enjoyed it, Bharat. It was good. We'll do it again.
So it's our pleasure. Sure, sir. Looking forward. Take care, sir.
You too. Have a good weekend.
Yes, it was great, sir. Thanks.
Bye-bye.
Bye.